We had a goal to acquire 100 more doors in the Pacific Northwest. We were able to close on 157 doors. So after we set our buy box and how many doors we wanted to acquire, we then had to figure out the plan to how can we actually buy this amount of doors. A lot of these brokers, they have a very good book of business in our Pacific Northwest. A lot of their buyers have slowed down. They don't have a lot of people to call and sell things to. So 2022 was an absolute crazy year. We grew almost every one of our businesses by 10 to 20%. Our lending business, Interest Funding, who provides short-term hard money capital to investors in our Washington state market, grew by over 15%, and we funded over $100 million in loans. Our brokerage, we had a goal to hit $125 million in sales goals direct to investors, and we accomplished over $150 million. And lastly, our development and fix and flip business created a lot of income for ourselves as we netted over 7 figures in profit over the last 12 months. So it's been a crazy year for us to collect fees, provide service, and invest in short-term investments that can create high yields. But the last goal that we were able to achieve, the one that we're actually most proud of because it has the most impact down the road, was we had a goal to acquire 100 more doors in the Pacific Northwest. We were able to achieve and close on 157 doors. So we blew through the metrics on that. So in 2022, we had this goal of buying 100 doors. So what does that even look like? The first thing we had to do was narrow our buy box and figure out what kind of doors we wanted to buy and what our minimum expectation of return is. Just because I can go out and buy property doesn't mean that it's the right thing. So always make sure you set your goal and also align it with what your income goal is. Buying property and the income all kind of tie together with me. So when I'm looking at that, we narrowed our buy box. We looked at the 3 counties that we purchased in. In Washington state, the core 3 counties are King, Snohomish, and Pierce County. They call that the Tri-County. Each county is going to offer you a different type of product and a different type of cash flow. So the first thing we had to do, because we wanted to buy 100 doors, is we had to define our buy box for each county. This allowed us to operate in all 3 counties and still make sure that we were acquiring the right kind of doors while we're getting that amount of volume. So for example, in King County, it's a high growth market, a lot of economic growth. That's where the big businesses are. That's where we typically see the highest appreciation. We set our expected return at 7 to 8% for that specific market. And then in Pierce County, which is home to Tacoma, Washington, the economic growth isn't as rapid. The appreciation isn't as rapid. So we were looking for 10% cash on cash returns in that market. By defining our buy box, this told us where we could look and actually get to those doors. So after we set our buy box and how many doors we wanted to acquire, we then had to figure out the plan to how can we actually buy this amount of doors. In Seattle, apartment doors can range anywhere between $150,000 a door up to $300,000, maybe even $400,000 per door. That means we're going to have to acquire over $15 to $30 million in property over the next 12 months. That is a big number. That requires a lot of liquidity. So the first thing we had to do was save our money. For the last 18 years, my business partner and I, we've saved and reinvested at least 10% of our net income every year. We can figure out our liquidity at the beginning of the year of how much we have remaining to buy the next property. In addition to, with all those fee-based businesses that broke all the sales in 2022, we can go through the projections and then take a 10% of that projections and actually budget for when we can buy, where we can buy, and what we need to bring partners in, or can we close on it individually. After we figured out how much liquidity we had to buy those properties based on our income streams coming in and what we still had in our reserves, we then started talking to partners and who would want to invest with us. Over the last 18 years, we built up a lot of valuable relationships with investors on a long basis. We know they like investing in our operations, and so we wanted to call through and check with who had the liquidity, who wanted to invest with us on larger multifamily properties through syndicating so we could count that liquidity in the stack. Once we knew how much liquidity we were going to have and what investor partners wanted to have, that told us whether the 100 doors was achievable or not, and we could get on the buying train. The good news is we've had so many people reach out to us and invested in our projects, we were actually able to acquire 50% more doors because the liquidity was there, in addition to the deal flow, which we'll talk about in a few moments. After we audit our liquidity, then we audit our portfolio. We look at what has high equity positions, what has been fully depreciated, what is income producing and what's at the return, and we look at can we trade those out for more doors. We always do this at the beginning of the year because that tells us if we have high equity position 2 to 4 unit properties, we might be able to trade that out and double and triple our doors without putting any more money in. So if you're looking at your liquidity position and you don't have quite the gunpowder to go buy what your goal is, look at your portfolio. Your portfolio has been growing at a rapid rate over the last 5 years. There is gunpowder sitting in your equity. You can use this equity to increase the doors and increase your cash flow. So every year we audit our portfolio, what kind of liquidity gunpowder we have, and we put that in our liquidity stack because that tells us how much money we need to raise or reinvest into other properties. So after we audited our portfolio and we knew how much equity we had to deploy into properties, we knew how much liquidity we were going to have based on our income projections and how much investor capital we were able to raise and deploy out. This told us to go shopping. So the best way for us to find deal flow is we had to define our buy box and then reach out to every broker in town and wholesaler in town, letting them know exactly what we were looking at. One thing I always want to point out is I'm a broker and an investor, and this is a trap that many investors fall in. Just because you're a broker doesn't mean you should be trying to make a commission. On majority of the properties that I purchase myself, I am the investor hat. I do not expect a commission. I'm more concerned about my goals than that 3% check. This has got me a substantially more deal flow. If I'm expanding out with these commercial brokers and residential brokers looking for deal flow and they think that I'm going to take half the commission, it doesn't motivate them to call me first. So I always like to make sure that they know that I don't expect a commission. My goal is to buy property. I'm just an investor, and it gets us more deal flow in. By building these relationships over the years, this allowed us to see a lot of deal flow in the second quarter of the year. As the market cooled down when interest rates rose, a lot of buyers exited the market. These commercial brokers that we've been building long-term relationships with started inundating us with deal flow. And so this also helped us achieve getting into a higher unit count. Again, our goal was to achieve 100 doors and we got to 150. Part of the reason we got to 150 is we had the liquidity, but the deal flow was also there. For the last 24 months, it was harder to get unit counts. And by networking with these brokers, it got us all the deal flow in and we were able to secure better investments than we've seen throughout the last 2 to 3 years. And lastly, make sure you have great relationships with lenders and banks. If you want to acquire real estate, you need to use leverage. If you want to hold on to real estate, you need to use the right leverage. So by expanding your banker network, it gives you more access to capital. More access to capital allows you to get to your door count goals. So we blew the lid off of 2022, broke all our sales records, we acquired more rental properties. So how do we set our goals for 2023? So as real estate investors, we don't just do generic growth. Like I'm not just forecasting 10% growth on each business every year. With real estate, it's a different beast. We have to forecast the market, look at where the opportunities are, and then set our goals around that. Going into the next year, I'm actually anticipate that our brokerage is going to have minimum growth on our current team. We're going to expand the growth there by adding in new sales teams to kind of achieve our goals. On our buy and hold, we've set the growth a lot higher. We are going from trying to acquire 100 doors in 2022 to over 300 doors in 2023. So why have we increased our goal amount so drastically? Well, the reason being is we are forecasting that that's where the opportunities are, which is amazing because we weren't really able to grow that quickly in 2020 and 2021. So we feel that we're going to actually be able to acquire more rental properties this year than we've been able to acquire in the last 3 years combined. In addition to, we are looking at 2023 as a way that we can become more efficient. As operators and syndicators in the Pacific Northwest, we run our own staff. We don't hire out property management. The more doors that we acquire actually makes us more efficient, which reduces the cost on our overall portfolio. So the upside of buying more doors isn't just in acquiring wealth, it's actually making us more profitable across our other 1,000 doors. So the plan that we've created to get to this 300 door count is that, again, the first thing we had to do was audit our liquidity. We know we have a certain amount of capital that we are ready to deploy out. We looked at our portfolio. Because we saw the market so hot in 2021 and 22, we sold off a lot of our huge equity gains and have already repositioned them. That means we don't have a lot of gunpowder in our portfolio. Because the gunpowder has shrunk on that side, we then are going to our private investors to invest with us on syndicating properties. So we've expanded our broker network. We are constantly meeting with commercial brokers, talking to them, When they cold call me to look at buying my apartment building, I'm spending the time on the phone to explain that I'm not a seller, I'm a buyer. And what do I want? By doing this right now and expanding that network, it's a great way for us to build these relationships now. A lot of these brokers, they have a very good book of business in our Pacific Northwest. A lot of their buyers have slowed down. They don't have a lot of people to call and sell things to. We know that we're going to be good, dependable buyers in 2023. So this is the year that we can really build that bond with that broker or that wholesaler. Nothing builds the bond with that deal finder is closing a deal. Being smooth, making an easy transaction and getting a deal done. Once you do that with a good deal finder, they will bring you more and more deal flow. So as the other buyers are sitting on the bench, this is allowing us to kind of run the field, build the relationships, and get more deal flow, not just for 2023, but for the years to come. The next thing we've been doing is talking to all of our local lenders and banks. Banks' demand for certain types of loan product changes quarter by quarter, year by year. So banks that we've worked with for maybe the last 2 to 3 years might not be lending as aggressively on multifamily or don't have the great rates for us. So we are meeting with local banks, talking to them, figuring out what their appetite is, whether they're trying to deploy that kind of capital out, and then we're building the relationship. It's not about just asking the banker, can you get the loan? It's what you can also do for them. Local banks are nice. They're like businesses. You can work with them. You can talk to them. They're not like the big banks. And so a lot of times what we're doing is we're talking to the banks, figuring out the ones with the most amount of appetite, and then we do what they love best. We're giving them deposits. We start transferring money around, building new accounts, which gives us more access to liquidity, and it can get us to that 300-door count. If we don't have those loans set up, it's going to make it impossible for us to achieve this goal. So working with the banks is just as important as working with those deal finders and brokers. And lastly, you got to define your buy box, because defining your buy box is going to help your deal finders and brokers get you the right types of properties, but also it's going to tell you when to pull the trigger quickly. If you have a good deal on the table, you can't be sitting there thinking about whether it works for you or not, because it could go right off into someone else's hands. So always, always, always define your buy box, know your goal and what you want to buy. The more you know, the quicker you can be, the more deals you'll get. So as we set our goals for 2023, the one thing that we always have to remember is market conditions are due to changes. We are going into an unknown time where they're forecasting a recession, and then they're forecasting high inflation, then they're forecasting lower inflation and not as bad as a recession. There's a lot of different parts moving around, and you have to stay on top of the trends and also on top of your goals. If we see a huge market shift, this might make us change our own goals. If all of a sudden cost of money goes up to 10% and there's not a lot of inventory in the market, we can't make deals pencil, we might need to change our goals of acquiring 300 doors and scaling that back to 150 in the middle of the year. Just because we set the goal of 300 doors doesn't mean that we're going to absolutely buy that amount. We are setting that goal on today's market. We're also forecasting what we anticipate in the market. But if that changes, we need to audit our goals, look at what is actually achievable and what's smart to invest, and then reset our goals. I want to thank everyone for tuning in to BiggerPockets. Make sure you like and subscribe below. Also, tell me what your goals are for 2023. We can chat about it. And if you want to see if I'm hitting my 2023 goals, check out J Dane Flips on Instagram or jamesdainard.com, and I will see you guys next time.